All right. What's going on, Daniel? I think I muted this puppy on the live stream side. What's going on, Murray? Guys, do me a favor. How's the audio? I got the old headphones in. I've been playing around with the old this mic, and I'm just not happy with it still. I don't know. It's a pain to kind of get it to where I want it. It's good. All right. Oh, Australia? Nice. So Dan, is your day almost over there? You guys at the happy hour already, or what time is it over there? 11? Okay. That's a long happy hour. Um, Trying something a little bit different today. I've got three chats up. I don't know if that's too much or necessary. Probably not necessary. Okay. Hey, what's up, Dims? Hey, what's going on? Who else is in here? You got some Singapore in the house? Nice. I like it. Oh, Ben, you're Australian and you're in Singapore. Okay. So what time is it there? You guys pretty much on the same longitude, right? In the evening? 9? Okay. I had some order flow come across our desk yesterday for 100,000 Bitcoin. We had a seller out of Singapore. 100,000 BTC. That was the biggest block size I've ever seen. Guys wanting to sell. Do the math on that. Tax free? I don't know. Probably not. Well, who knows? Yeah, you're right. I mean, you're right. I mean, Singapore, you still have the capital gains, right? It's tiny though, or is it zero? Makes sense. Good for them. Might have to get an office there one day. Yeah, I mean, I know it's probably the best in the world. 0, 5%, whatever. It's awesome. Can you guys? What am I sharing? Do I have Think or Swim up? I guess I think I have the futures charts up. Futures in the euro, right? Does that look okay? All right, good. Okay, well, let's get into it. So we got jobs day, obviously, payrolls on Fridays, the first Friday of the month, and I didn't really look into the numbers too much. It looks like it was weaker than expected. The talking heads are going to do their usual anchoring around the story, how the Fed doesn't need to raise, they only need to go two times this year instead of three, and then that might be true. A lot of things can change. What matters more is the overall global macro picture. So the Fed is always looking in the rearview mirror. And if growth starts to slow, forget about two hikes. I mean, they'll be backpedaling so fast. I mean, all you would need is stocks to break the lows from earlier this year, and I guarantee you the Fed cares more about S&Ps than they do trying to figure out the inflation numbers because they're absolutely horrible at that. But 2531 is really big in S&Ps. It's the same area in the Dow or the Nasdaq. If we break that level, it doesn't matter what the wage inflation is. Um, if the market starts to go down, the will totally react to the equity market. But what I care about here this morning is the euro. We're back on the lows, right? And if you guys have been following me in our firm for a while, we've been talking about we thought that the next big global macro move was going to be bullish dollar, and you get the dollar right, you're going to get a lot of other things right in markets. And so there was a completely contrarian call. Majority of the entire world is short dollars and bearish the dollar. And so, I mean, I've been talking about this for forever, but I talked about it in our last session. This is the long-term downtrend. The market failed exactly where it should have at 125. And now we've completely broken the intermediate term. So I think this is just the beginning of a much bigger move, guys, in the dollar, and it's going to affect everything. I mean, when the world's reserve currency catches a bid, it has a big effect on commodities. It has a big effect on people that have taken out loans in dollars, right? Emerging markets get crushed. So this is just a classic example. I mean, we started this bull market in 2014. We went sideways for a year and a half. We had a pullback. We retraced halfway of this move. I teach this to my traders all the time. This is our wall concept, right? You guys know this stuff by now. Whether you want to do it from here or whether you want to do it from here. The concept is simple. It takes the bulls all this effort and buying to create this massive wall, right? And so it's not easy for the bears to take that entire wall down. The probability is that you're going to hold halfway or do a 618 retrace. Okay, so the market held exactly where it probably should have longer term. It did over here on the euro. When you look at that regression channel, you can even look at our pie line right here. Draw that in yellow. You guys see this dashed blue line? That's our pie line concept. So while everyone is getting bearish because we're below the 200, first of all, that's a terrible way to trade. Just because you're above a moving average or you're below a moving average, you never want to just be flip-flopping bullish or bearish. You're going to get so twisted up. I care more about the fact that this line is rising. That shows me the long-term bull market. It's the same thing here on pi. So it's rising. The 200 is rising. So being below the 200, it sucks in so many people that think this is a new bear market. And our model on a cyclical basis, we held exactly where we should have. We held pi. And so everybody was short. Everybody's on the wrong side of the ship. And that's what you need to create the momentum. You got to create the swing as everybody needs to get wrong on the wrong side, and then it unwinds the other way. So I think that's exactly what's happening. I think this was one of our best big picture calls. And so we want to stay with it. So how have we been playing it? We've been playing an aggressive core short. And we're just keep selling rallies on the euro. We couldn't hold the 200. I think you're going back to pi. That's the next area, the next target that we can get to. That's that. I mean, we've had some nice sales. We've made a lot of money so far. We've been short for this entire move down. And now we're getting crushed again. So today's numbers is just going to feed into this idea that there's no inflation. The Fed doesn't need to raise as aggressively as everybody thought in January. So I mean, it's dollar up pretty good right now. What do you guys have questions on? You want to look at BTC? Oh, this is something else I wanted to talk about here. I mean, I don't know I really don't have a good correlation on FX moves to Bitcoin, but so far dollars rallied and BTC's rallied. But let me switch gears here. We'll go to the other chart. All right, this is pretty amazing. I wanted to share with you guys this morning. I'm actually going to take some profit here, though, on the euro. I think I'll take a little bit off. So you guys can see here, this is just one of the positions. So sold some euro this morning on this pop, a couple $100 in both of those lots. So the market popped. I can talk about why I sold right there this morning, but now we're coming down here in a new low, so it makes sense to cover some. I'm long some Bitcoin on these CFDCDs, $700 there. So let me just close these trades and then we'll look at BTC. Let's short some euro versus the pound too. Probably take a little bit of that. I mean, the dollar sold off on the headline, and now it's, I mean, I don't know what it's just playing out in the same trend. I mean, if they don't think the Fed's supposed to go, the dollar should be coming down, not rallying. So I think the market's sniffing out the fact that there is no inflation, so it's not dollar. It's this growth slowing, I think, is going to dominate more than anything. Euro's growth is slowing. The inflation's even less there. So Euro zone's going to move more on the margin than the Fed. How did you find the right length for the sine curves, Pepe? Good question. I'll show you guys how I do these. It's pretty amazing though. This frequency has been absolutely crushing it. Okay, one more second. I'm just gonna close one more trade here. All right, guys. So I just did a video for my crypto team, and if you guys aren't familiar, you go to we're transitioning my old site, my old company into our new asset management firm, but it's going to be blockedgecapital.com. You'll be able to start signing up for real-time alerts and things. But right now, when you go to, I guess I'll just show everybody since I'm talking about it, and then we'll get into the sine curve stuff. But I was going over with everybody in our room this morning. I did a video on just how, what I'm about to show you guys is how amazing these turning points work when you start to understand time. So right here in our chat room, we have it's only $99 a month. We have a paid room. And so we're putting in real-time alerts on altcoins, the majors. We're talking about mining. We're talking about new coins, old coins, risk management, everything. It's an amazing room. I think we're up to, I don't know, there's over 1,000 traders in here. And then I think we're like 120 on that team now. So it's good collaboration. You'll learn a lot. But anyway, just to get into it. So as when you put a wave under here, there's lots of different cycles. So there's transverse waves. I always hate that color. There's transverse waves, longitudinal. Price tends to move more like this. And then the sine curves work well for benchmarks and time. So check this out. So these, again, the cycles aren't about highs and lows necessarily. They're about turning points, and it's a rhythm that the markets are on. So obviously, if we got highs with every top of the cycle, price would never go anywhere, right? We'd just be sideways. But this 8.6 frequency, that type of frequency is what the business cycle's on as well. It's 8.6 years. The economy has these shifts in confidence. Anyway, we can get into that another time. So watch this. This was the high BTC, the first time up, right? We had actually a double, triple top right there. But the first time up was right with the low of this cycle. Okay, here's the bottom after this pullback, right with the high of the cycle. That's called cycle inversion. When you make a low with the turn in the top of the cycle, the trough, or the peak, I mean, with the peak, that's a cycle inversion. So you made a low with the peak in the cycle, right? And then look, you rally to the next turning point. Right on the turning point, you had an exact high, right? You show anybody that in markets that doesn't believe cycles, that's just amazing that you just tagged two major highs and a major low on 3 consecutive cycles. Now watch this. Here's another high with the turning point, right? Okay. Here's the low with the bottom of the cycle. Here's the exact high with this cycle. Right on the exactly. Okay. Low, another high, another high. We bottomed here with the bottom of the cycle. And then this is what I was talking about in our video with the team this morning, is that it's interesting that here we had a turning point and you didn't have a change in direction. Okay. So what that leads me to believe is that this turning point is going to be pretty pivotal. And we're coming right into another major level here, the 200, which is where we failed the first time. All right. So we really need to watch. This is the 200, but it's also the 10,000 level, which is a big psychological level, right? Those big whole numbers in markets matter. It's like, anytime you get to a par in bonds or parity in the FX markets, parity is when you're one to one. You can take a look at dollar Swissy has reached parity and had resistance. Here, I'll show you right now. So there was a big move. A lot of our guys have been long the dollar because of our call on dollar Swissy, and long for other reasons. But this is kind of sloppy because I have the other annotations over the top of this. But here you guys can see the big whole number, par or parity, 1 on dollar Swissy. We had a massive rally in the dollar all the way back to this major level. So this is big resistance right here on that FX cross. But back to Bitcoin, what we need to watch right here is that because we didn't get a high with this turn, that means that we can keep going here till this turn. And then this is most likely what's going to happen. You're either going to make a high here, and then we drift back to we ebb and flow, like just how we rallied here and then we ebb back. We rallied here. We could ebb and flow back the other way here, back towards 8,000, 7,500, maybe even retest 6,000 with this turn. That's certainly possible. But the other scenario is that we get a close above the 200, and then we actually continue to rally into this turning point. And we could even rally, maybe we break 12,000 and rally to, whatever this high was, 17. Maybe we scream to 17 and then you get a turning point and then we get a pullback. But this is just the design of the universe, quite frankly. how everything cycles, but it's definitely true in markets. When you understand it, it's really powerful stuff. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9. We had 9 turning points there that all produced highs and lows. And this is the only one that we didn't see a turn. You actually even got a high here. And here we didn't have a turn because this continued to rally through that turning point to the next benchmark. Pretty amazing. You guys like that stuff? Look how, I mean, it's just unbelievable. I've never seen anybody else talk about cycles like this except Martin Armstrong, and he talked about it on the big picture scale. I haven't seen anyone ever talk about it on a daily chart of Bitcoin, and nobody knows this stuff even exists. And it just comes from, I've just been passionate and interested in cycles, and you got to just pay attention. I mean, they're there. You just have to kind of look closely. So I think this is a big level. This is also the end of a week, guys, too. So we had this oscillator turn up, which we like this cycle too. This is an equation of motion. Oscillation is a nice equation of motion and in physics and science, and this does a good job. This turned back up, so maybe we will. It's all going to be about 10,000. If we get through 10, we should expect a rally to this turning point, which looks like it's kind of, let's see what the date is on that. May 21st. So that's almost another 8 days from now. Get that 8.6 count. Pretty amazing. I like it. So Pepe, so the way I draw it is it's not an exact science. It's just I'm just making observation. So I can clear all this out, get rid of it, and I'll show you. We can do some other. Would you guys like to do this on some other coins too? So I can remove that. And literally all I did this morning was come in here and I picked this low and I picked this high. And then I try to see if I'm trying to see if that rhythm is capturing the market correctly. Because I don't really care about, hey, I have to use this exact sine curve, because you can make it. I mean, this is how waves work, right? You can have a high frequency wave, you can have a really low frequency wave, but I'm just caring about, hey, what is this market kind of moving on? And then it'll change over. I mean, there'll be times where maybe the volatility is really, really, really high, and these cycles are maybe playing out a little bit different. But you can also count the time frames in between the waves. So I just grabbed the low and the high and then went and saw if that kind of made sense. And then I actually stretched it a little bit more. And then that wave did the best job right there. So I see that there's a high there. That got the low, that got the high, that got the high, that got the low, the high, the low, the high, the low, the high. So I didn't count the distance, but if you count these candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So that's almost two times the 8.6 count. And guys, the reason 8.6 matters, 8.6 is a derivative of pi. All right. If you look at 8.6 years, that's 3,144 days, roughly. You have a leap years in there. All right. So that's pi times 1,000. It's just a mathematic thing. You can look at 8.6 times 2. 8.6 times 3 is 25.8. And, 25.8, I've talked about before that even the Earth's equinox, the precession of the equinox is 25,800 years. So that's a full circle. All right. So anyway, this is kind of cycling on, 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Yeah. So it's basically 2 cycles in between each. You guys get that stuff? Look, 1, 2, 3, 4, 5, 6. All right. If you look at the high right there, 1, 2, 3, 4, 5, 6, 7, 7 into this low. This was 8. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Yeah. So 8 was the high there from this low. So you can count on that 8 cycle a lot of times too. Like we dropped big on the weekly level. We dropped 8 weeks into this low. Pretty cool. All right, Squidly. Sure. Why is the 200 significant? Yeah, the 200 is significant because it's a very popular moving average in technical analysis. So most traders are going to have that moving average on their chart. So it's a little bit of a self-fulfilling prophecy, right? A lot of traders will use a 50-day moving average or a 30-day moving average or an 8-day or 9-day. I mean, we like to treat these moving averages as areas on the chart, but you can see that, they do a pretty good job. If I change this color, and you could probably see a little bit easier, but here's the 8 on the way up. So again, if you guys caught me earlier, I said, do not be shorting things just because they're below a moving average. If you shorted right here, I mean, that's just foolish, right? This isn't an uptrend. Just because you poke through the 8 by a little bit, there's no reason to get bearish there. These are areas. I always use the analogy of like a boxing ring or a Muay Thai ring. You can push against the ropes, right? These things can give. So what I care about is the direction of the 8, but that has done a good job for that. Anytime you get a real momentous move, the 8's going to do a great job. I don't have our bands on here, but a lot of times we use the moving average bands, which shows a nice wave formation. Sometimes I just try to keep it simple. You don't have too much spaghetti on the chart. But the 200 is a moving average that's a very long-term moving average that everyone pretty much uses. So most of those traders are that's why we failed up there last time. So it's good. People treat that as resistance, just like they treat it as support. But again, this is a problem with do you know how many people were getting bearish right here? I mean, I know some guys, some of you out there in crypto land like to watch that guy, Tony Vay or whatever. He was screaming that the market was bearish because we were below the 200 on Ether, and he sold right into the low. We were talking about Pi was right below the market. This was the best place in the world to buy since the highs. So that happens in markets a lot. Nobody has a 314 period moving average, which is what this green line is, unless they learned it from me. All my years on Wall Street, nobody uses that. That's just something I came up with. It's not rocket science. It's just a simple discovery, but I understand the importance that it's a time thing. It's not about a moving average. This is about a certain amount of time has gone by, and that's why the market held there. It's not because everybody had that moving average on their chart. Most people are only using the 200. Most traders have no moving average after 200, and they all want to get bearish right there. because you're below the 200. But cyclically, nope. It's the same thing that I showed earlier on the dollar. I've shown it before on the British pound right after Brexit. Everybody was getting long the pound, and we sold right into pi. It was the exact high. This actually works in our favor too, because it traps everybody. It's like a big bear trap. You get below the 200, and a lot of those kind of, I don't know, I guess I would say amateur technicians, they like to chase that. And then that's usually a nice trap for us. But anyway, that's the 200. That's what that's all about. What's OBV, Matt? Yeah, Squidly, you're welcome. Daniel, market corrects through time or price? Both. Both. You know, you got to have both. There's price, but then time is actually more important. I mean, people like to say timing is everything. And philosophically, I don't really, timing isn't everything. I mean, I guess you could say, like, you know, family is everything or God is everything. But timing is pretty much the most important thing. One of the most important things in life. I mean, you think about when you met your spouse. I mean, if you're 15 minutes early or 50 minutes late, if you're a day late, day early. You know, I was thinking about that when you look at mining, when you look at wanting to mine versus buying Bitcoin outright, everybody that if you bought mining equipment up here and you started mining, you put your money into mining, you actually reduced your risk a lot, because if you just said, well, I'll just put my money and buy one Bitcoin today at 18,000, well, guess what? You know what kind of rally you have to have now just to get back to break even, just to break even on your investment? It's almost 100%. Let's see. So this is timing. This timing matters a lot. I mean, if you buy one BTC for 18 grand up here and you sit through a 60% pullback, okay, now what percentage gain do you have to have in the price just to get back to break even? That's 170% gain just to get back to break even. That's a lot of work. I mean, Bitcoin is such a monster that it probably is going to make new highs in a relatively short period of time. But in most other markets, like I was trading at Schwab in 2007, and I watched these people buy the highs in Google, and I try to tell them to buy puts, but there's just people, you know, they want to make their own decisions. They don't want to go to the sidelines. And there's a lot of people and a lot of people got bad advice to buy the market up there. And it took, for Google to get all the way back to those highs from 2007, it took, I think, 7 years? So there's a time to be aggressive when you want to buy Bitcoin outright, and instead of maybe putting your money into like mining. Like the thing with mining you have to think about is, well, I got to tie my dollars up for a longer period of time, but I know that I'm going to get consistent BTC. So when you have prices really high, if you're buying these really high levels, you're taking a lot of price risk, because you would have been better off taking $5,000 and put it into an ASIC miner that would give you, you know, one Bitcoin over maybe 2 years, or, you know, half a Bitcoin over a year. But you're not going to be you're not going to lose 60% of your investment. At least, you know, you depreciate the miner. Maybe you can sell it down the road. but you at least know you're going to earn that Bitcoin over time. That's something that I wanted to do some more videos on that so people understand that difference. I don't even know why I got on that. You're asking about the pullbacks, right? Time versus price. I mean, I would just say it's not all or none, guys. It's not one or the other. You want to, everything's relative, so you want to use both. I mean, how price pulls back matters. Like I don't like to buy collapses. I want to buy orderly pullbacks. And I don't want to just buy high within the cycle. I got to let the time play out to help me catch the, help me be patient. Use the cycle to help you be patient so that you're not getting stuck rebuying too early. We could look at examples of that. You guys got some good questions now, but just on that last point there on pullbacks. So when you're coming off a major high, like this was a pretty orderly 2-reaction, three candle pullback. All right, and you held the 8, and that's good. I mean, we could probably look at a smaller time frame, and like a 4-hour chart would probably help you with the buying the bottom of the stochastic. But here you have, if all you did was say, well, I just buy every third candle down in a pullback, well, you can still be pretty high up here. This is the bottom of the range at the bottom of the cycle. This is a lot of distance. So you got to kind of put both together. I mean, there's other things you can do. I mean, if I get a pullback, if this is my 8-period moving average and I get a 2-bar pullback, I mean, I'm still not buying 2-bar pullback if I'm way above the 8. That's looking at price just based on the angle and distance. This could be my 30-day. So if price is doing this and then it goes vertical, I've created a lot of angle and distance. Anytime I get way away from the 8 and I get way away from the 30 or the 50-day moving average or even the 200-day moving average, that's creating a lot of angle and distance. So I don't want to buy those quick pullbacks after a really steep move up. I got to wait for a little bit deeper near the 8 or ideally near the bands. And then, the reason why we have a lot of success when we're day trading is because we wait for the 15-minute and the 30-minute cycles to start and time our trades. Like you could get a nice pullback. You could get a nice pullback within the trend, but still be high within the 15-minute cycle. And the whole cycle will reverse. And then the trend changes because you just bought into the high of the cycle. You're buying late within the cycle. It helps because eventually all these uptrends die, right? And then you reverse. So when you're low within the cycle, you're going to have a much higher chance of success. And then as you start to get high within the cycle, you start buying the dips at the end of the cycle. These have a much higher probability that you're buying the last couple dips and then it rolls over on you. So we try to time our trades with the 15-minute and the 30-minute cycle because that gives us the most kind of runway, gives us the most runway in our day trade. And then as we get to the top of the cycle, we know, all right, it's time to tighten up our trailing stop, take the majority of your profit, that type of thing. Uh, Dims, how often do you use a hard stop? I don't use a hard stop very often. Just on maybe some overnight stuff when I'm not paying attention to the screens. I think hard stops are good for maybe people that are new to trading because it keeps you disciplined. I mean, I if you're not using a hard stop, you got to use a mental stop. Those are really the only two kinds. So, but at the same time, I don't move my stops. So if I, for example, here on the daily chart of Bitcoin, if I'm buying into this area, I know my risk is at 6,000 or a little bit below it. 5,800 was the intraday low, somewhere around there. So I don't need to put in a hard stop. I mean, I might if the market doesn't rally and I don't want to wake up to it down at 4,000. So I'll put a hard stop in overnight. But my mental stop, I know where my risk is, and if that starts to trade or break down, I don't say, oh well, there's this other reason why the market's going to turn around now. That's just bad psychology of trading. If you take a trade and you identify where your stop is, do not move your stop. It's much better to stop out the market reverse, then you get right back in, than moving your stops. Here, I'll give you guys an example on Ethereum. It's really easy when you're losing in a trade to start to make excuses for your trade. To start to say, oh, I know it's below my stop, but I don't want to take the loss. And I read this thing on Twitter that says, this is really bullish, so I think price will turn around. As soon as you start doing that, I'm telling you, that's so dangerous. You're going to get yourself in a situation where the market just keeps going against what you think should happen, and you're just going to watch it. And then you don't want to take the loss, and then you start trying to figure out other reasons why it should turn around, and it just goes further. It keeps going and going and going against you. And believe me, I've done that. I've done that so many times early in my career. So that's a simple rule where I do not move my stop. I'd rather set my stop, and again, if it's a mental stop, I'm perfectly fine with taking my stop and then waiting and watching. If the market turns back up, fine, I just get right back in. So on Ethereum, I was buying into this dip here into Pi, which again, that's when there was a lot of other technicians that I think are pretty amateur in the space that were all calling that this was a massive day trade short, and they were saying that right into the low, and then the market bounced like crazy for 4 days. But anyway, we were buying here. We got a pretty good bounce, but then we got no follow through above the 8, and then we retested that same level. So I bought again into it. But then we couldn't hold, and once we couldn't hold 400, that's where my risk was. And so I just said, you know what, I'm cutting that risk, and I stopped out on 80%. But this is just a little area on the chart, guys, within a lifetime of trading Ethereum. I mean, to me, it's not even like a stop. It's just I'm realizing some of my position that's out of the money, but I'm not calling that a loss and then never trading Ethereum again. I'm just going to wait and watch. And then sure enough, the market didn't follow through. A lot of times when I stop, it's really close to the bottom. So I don't have any hesitation on just getting right back in. Yeah, you miss out on getting your money back for, 50 points or a 2-candle move, but I don't care. I'd rather miss out on this than get crushed on another 50% drawdown. This is another big drawdown. If you don't cut your risk, and that's risk management. And then I have all this on the upside. So that's what I say about that. but I usually use a mental stop. Oh, on balance volume indicator, Matt? No, I don't. I don't even know what that is. So, I mean, volume has its place. Volume actually matters more in crypto right now than any other market because you can really measure the volume pretty easily across these exchanges. But I'll give you a good example. Somebody wants to sell 100,000 BTC yesterday that we were trying to work an order for. That's not going to show up on the volume anywhere. That can come out of nowhere. The volume, the same thing, like if you look at the order books, I mean, I like to look at the volume at the big turning points. Like, all right, there was a lot of volume on the lows. You know, this was a big bottoming tail into pi that had a lot of volume. That's bullish. Um, you know, here we made a low on big volume. That's good stuff. I mean, that just kind of confirms to you that, hey, you know, these are some major points here. There's a lot of these are big spots, major areas on the chart and in price. But it's not the end all be all. The reason it doesn't really matter in other markets because it's so hard to track the volume. I mean, this is just the GDAX. So in crypto, the GDAX obviously has a decent amount of size and it's a little bit more of a professional exchange. So I like to use it. But as these markets evolve, I mean, when I'm trading treasuries, there's so many platforms that you can trade across, and there's so many different exchanges all around the world that I could never measure the volume just from one platform or one indicator. The volume is it's just not accurate when there's there's these deep there's dark pools where you can't measure the volume on that stuff. So but I would say that the thing I care about on volume is you want to see the volume accelerating in bull markets. If you're making new highs and there's decelerating volume, that's not a good thing. That means that all the buyers everybody's already bought. And that's when markets crash because everybody's already bought. And then when the market drops, there's nobody there to step in. The market goes no bid. I mean, I'm sure that some of those indicators will pick the lows. It's just one factor. I mean, it could be a good indicator. Let's see. I'll have to take a look at it. I mean, I'm always open to different things to give you different edges. I'll just tell you guys, you got to be careful not to have a million things on your chart. Trading is complicated enough. If you give yourself way too many signals, you're going to have like analysis paralysis. You just got to keep it simple. Whatever your trading plan is, you try to keep it simple so you can stick with that. If you could throw too much stuff in there, it's just, I mean, you said the intermediate term and long term cycle were joining at the bottom, middle of May. What's your outlook for that for BTC? The intermediate and long term for May. Oh, okay. Let's see if I can reproduce that. I don't know what's up with Coinergy here. Euro's up new lows, 119 handle. Okay. You know what? I might have it. Let me see if I can. I might have that over here. BTC is getting wrecked. I don't know about that. No, I see what you mean though. 5 minutes kind of rolling over. I mean, I can try to put those longer term cycles up. It just takes a little bit sometimes to identify the right one. But we can try to look at it. If I'm looking at futures on BTC right now, I care about the bands here near term. So we use these exponential moving average bands. It gives you a good visual of the trend. So this is a 15-minute chart. So that's the near term or the micro time frame. All right. So the market may make a higher low there, but this is really what's defining this uptrend is these higher lows right now. If you break that, you should get a deeper pullback to here, maybe even all the way back down to pi. So this is the big spot to watch if we're going to hold this trend. And then you can see the cycle is pretty low. Cycle is pretty low. Not a bad place to take a stab at a day trade if you wanted right here. Let's look at the 30-minute cycle. $30 still coming down. The 30 minutes cycle is probably going to run in line with that same level I was just talking about, 95.27, 95.30. You know, again, this is an area. It's not. So I added here yesterday. I'm still long. I came out of a little bit into this push, and then I'm offering 9,900. This is a big spot. You know, we're having troubles getting above the high from earlier in the week, last week. We still have this near-term uptrend. You're still in an intermediate-term uptrend. See if I can throw up these longer-term cycles for you guys. So I already covered this wave here on the daily. Again, this is, I don't know why all these old drawings show up like this. These were all signals that we had drawn, and then for some reason, Coinigy, they end up at the bottom of the chart. I don't get it. Maybe get this watermark off. It's a little easier to see. I guess we go to a log scale. Probably will help with the longer term stuff. There's a bad tick too. Bad data on that chart. I don't know, guys. This takes kind of a while to do. What I was saying about the outlook for May is I think we were looking at Neo really, but you could put another wave in here, an intermediate term wave that I guess I'd have to refresh this. I didn't save it when we put it in our chat under the analysis, but this would be an example of a longer term wave. And the summer has been showing up on a lot of charts as a big turning point, longer term. And then you could do another intermediate term wave that's like this. So the summer is actually a big spot in a lot of markets when we were looking at it the other day. I mean, just what I was saying earlier. Oh, man. This Coinigy gets annoying sometimes. If we get, it depends on what we do here at 10,000. So if we can't get above 10,000, there's, from a timing perspective, there's a lot of room to go back lower, back towards 7,000, 6,000. And then the next turning point isn't till the end of May. And then there's a longer term wave that kind of comes out around July or August. But I mean, that's a lot of time frame to try to be making decisions about. I'd rather people focus on the if-then analysis of, if we get above 10,000, how are you going to play it? You know, if you get above 10,000, what are you going to do? Are you going to double your position? Are you going to just enter the market? I mean, it's not really helpful for us just to say, well, we're going to make a low out in June and July, or BTC is going to be back above 20,000 by the end of the year. I mean, that's like not really helpful. You could have said the same thing back in February, and you still might be right that BTC goes to 20,000, 30,000, 40,000 by the end of the year. But man, it's not really helpful to sit through a 50% retrace and then just sit on a loss for 9 months. What are you going to do? You're going to put all your capital into BTC because somebody said it's going to 40, and then you're 50% under the water and you have no dry powder. You got no capital to do any other trades, and you just waste all your time, and then you have a huge opportunity cost because you did. I mean, so that's not really helpful. We want to be trading like, hey, if we can't get above 10, if we can't get above the 200, and let's say we take out the prior day's low, or we break the trend on the 4-hour or the hourly, then what's my risk management process? Then I'm going to take off half my position and see if I'll raise some cash, and maybe we get better levels to buy on this turning point. That's the if-then analysis. If we get above 10, I'm probably going to add to my position and then look to take profits again on this turning point. So you don't have to make a decision out in time. The further you go out in time, the harder it is to try to forecast, really. You know, it's easier to see the momentum the next 10 minutes than 10 years. But you don't always have to act inside of certain levels. You can just let price prove itself. If we can get above 10, that's bullish. If we can't, you know, I don't think there's a rush to be buying up here. I mean, we liked buying here. We liked buying here. I added a little bit yesterday, more near term. But you kind of just want to let price figure out what it wants to do around the turning points and then trade it. I mean, my attitude is like anything can happen, you know. Yeah, Bitcoin's probably going to be 100,000, but you know, you still got to trade it. I try to have some more of these cycles lined up next time. We had a pretty good call on the breakout here on Ether. We finally got above 700. I had a couple guys in the room are asking me, they said they were struggling with when they should buy new highs and when to take profit on new highs, because I teach that most of the time you want to be coming out on new highs. So the kind of the novice trader is fearful in pullbacks. I mean, they enter the market and they only want it to immediately go in their favor. They get so fearful when the market moves against them, which is actually the pro, the really good trader. He wants the market to go against them because he wants to buy the better levels. So I like when the market pulls back in my favor. So most traders are fearful when they see red and their position's out of the money. And then when it rallies, so they either won't enter there, and then when it rallies, they feel like they missed it. Then they get back to on a high and they say, oh, well, I'll just wait to see if we can get above the high. And then by the time it breaks above the high, now they enter. Instead of buying here, they enter on the highs, and then a lot of times you get the pullback and their timing's all off. So we like to be buying here and then coming out, taking some profit on the new high. While everybody else is chasing, you just say thank you very much and you let them buy the higher levels. And then buy the weakness, come out. But there's a time to buy a new high. And what matters is where price came from. So if you have a market that's doing this, all right, this is when price goes from here all the way to here, that's a pretty big move in a straight direction without a pullback to be starting your trade. So 90% of the time, we're not buying on new highs. We're coming out of positions we already bought into a new high. But so what the key is to focus on where did this market come from as to whether or not it's breaking out and I should buy that new high. This is different. This is price doing this, consolidating, and then breaking out. You guys see that difference? Here, I have a low. This to this is not a lot of distance versus this to this. You guys see the difference? So I was okay at buying that high rate, buying the new high there yesterday. That's different than a pullback like this. See, this was a one-day pullback, and I said that this was a meaningful setup right there because it's a bearish engulfing. Typically, that should experience follow-through. And the fact that it didn't, and then we took the high out, that was bullish. So had this dropped another couple days down, like that, okay, and then you rallied, this would have been a great buying opportunity down there. That's what I actually wanted to see happen. We didn't get it. But then if you would have pulled back and then you would have rallied to a new high, No. You already missed the opportunity to buy. Now you're buying what I just explained. You're buying this after here. You see how far this move is? If we went from here to a new high, why would you be buying there when you should have been buying here? That's a lot of distance to now be adding. So it matters where price comes from. I guess that's the best way I can explain that. That's a different type of breakout than a pullback. Pulling back and then making a new high I don't even consider that a breakout. That's like I don't know. That's an opportunity to take profit. All right, let me try to see what you guys are messaging here. Kind of got on a rant. So yeah, I mean, Daniel, I mean, what's his process to say that we're going to be at 15,000 by May 14th? I mean, you could easily just be at 6,000 by May 14th. I mean, like, I don't understand where those guys get off just making those grandiose calls like that. The same guys that were calling for that crap on the highs, terrible timing. I mean, it's absolutely terrible to be saying, oh yeah, BTC is going to 50,000. It's not helpful. That gets people to pile in right after a huge run when we were telling people to take profits because you had angle and distance. The cycles were high. I mean, that's just crazy. It doesn't help people to navigate all this. I mean, that stuff was just, that's why I started the firm, is to get people away from doing that junk. I mean, yeah, it might go to 50,000, but when? And how are you going to play it through a 60%, 80% pullback? You're going to lose all your money before it goes to 50. It's goofy. How do you think the alts will be affected? That's a good question. I mean, I thought it was interesting at this time when the market bottomed here in April that let me just get rid of this so it's not distracting. The alts actually moved up first. There was some of the names that we like Cardano moved up first. Salt started moving up first. EOS was one of the strongest charts. EOS really started breaking out way before this, but all that stuff moved the day before the big short squeeze on BTC. So the alts actually started to rally first, this time off the lows. And I kind of made that example that sometimes the small caps will do that. Sometimes the small caps do that in the equity market. They're a little bit higher growth, they're higher risk. They tend to rally faster when the tide changes or when growth comes back. So I thought it was interesting that the alts led the rally. If you start to see the alts break down, maybe BTC will follow. I kind of think that the market overall cares about Bitcoin so much that it's going to be really hard for Bitcoin to go on a big move and the altcoins not to eventually follow, But I would say my philosophy is I treat Bitcoin, the majors, as the overall market. So most of those coins are going to follow the overall market, just like most stocks will follow the overall market. But when you want to make a decision on a coin, you always just kind of want to trade that specific coin. You don't want to just say, well, Bitcoin's doing this, so even though my altcoin's in an ugly downtrend, I don't like to buy stuff that's in downtrends, that's in a down cycle. Even if I think Bitcoin's rallying, you got to be careful just to say, well, Bitcoin's rallying, so my altcoin should rally at some point. I mean, there's so many other things that can be going on with that coin. That's just not a good strategy. You're better off saying, all right, only look at that altcoin chart and say, Well, I know I can be aware that there's a big spread between the Bitcoin market and this altcoin. And yeah, that probably will catch up, right? But that's not necessarily doesn't need to happen. So you might as well just use your methodology, or you like use our model that when the altcoin starts to bottom, you'll get some other signals and then you can get involved. um, I don't know. I mean, I don't think there's that much to look into the whole alts versus. I mean, you want to kind of compare things. You can compare like Litecoin to Bitcoin. You can do the relative value stuff. So relative value trading is about taking a 10-year bond versus a 5-year bond and comparing the relative value. Treasury bonds should move in the same direction. The 2-year should move up. The 5-year should move up. If treasuries are bullish for the day, everything should move up together. But I might have the 2-year moving up faster or in a bigger percent gain than the 30-year. That's a relative value trade. So we talked about the other day that Litecoin was really cheap relative to Bitcoin, relative to the Ethereum, relative to Bitcoin Cash. So you can kind of do that with the alts also. You can kind of say, all right, well, I like these altcoins. Like I like Neo and I really like Dash, or I really like whatever. And you get to know, you get familiar with that coin, and then you can say, man, I'm really seeing that Ethereum and Bitcoin and now Litecoin, we've had these nice rallies and my coin is just kind of dormant. And you can pay attention to those spreads, and maybe that means you nibble on that coin that you like. And I think you should pay attention on a relative value basis to those types of spreads because it'll show you where the opportunity is. But you still need to trade that altcoin as it should be traded per that specific chart. I mean, at the end of the day, that always gonna make it simpler. I mean, is it in a downtrend or is it in an uptrend? Is it cycle down? Is it cycle up? Ethereum is really doing well here again. So we talked a little bit about on our team that Litecoin was looking pretty cheap down here relative to what, Bitcoin Cash had this big move. And then Ethereum's been just chugging. But Litecoin was really sticking out to me. We said, hey, let's buy some Litecoin because it just looks cheap, what the rest of the market's doing. And then we had a big catch up yesterday. Daily 4-hour. Dan, does that kind of answer your thoughts on the altcoins versus the majors? Man, on this 4-hour, look how low Litecoin performing again. Kind of got to look at these charts when you do these versus different time frames because it depends on how you've got it set. Ethereum looks pretty rich again. So here we can see Litecoin. There's a pretty big spread between Litecoin and Bitcoin Cash right here. Pretty big spread right there, and then boom, it just catches right up. You could have this spread narrow by Bitcoin Cash collapsing. If you were truly playing this on a real spread basis, you would short Bitcoin Cash and you'd buy Litecoin. And then you'd wait for those to converge, and then you'd close out the short, and then you'd make your money on Litecoin. But I don't really do that. I just like to see when the market gets a pullback. I like to see what's kind of cheap and go with that or add to that. It just helps me figure out if I'm really heavy in Ether and then Ether is really sticking out. Maybe you lighten up on your Ethereum. Next time you get a pullback, I kind of add to what maybe looks like it's underperforming or is cheap. Yeah. It's kind of hard to see this, guys, but it's subtle, but Litecoin was down here. And then it just ramped right and caught up to everything else. What else you guys want to look at? Do you guys have any other coins? Okay. Stellar. All right. Whoops. Definitely bullish. When we look at, I mean, this is versus BTC. But even with Bitcoin strong, I mean, this really started to turn before the overall market did. You could see the dailies making higher highs and higher lows. You kind of experience a little bit of a pullback. This is versus the dollar. Just a little bit of a pullback. We're right on the 8. You guys can see that blue line. And I'll look to buy into this pullback. The daily cycle is kind of high. I'd rather see it come back down, maybe buy something closer to the 30-day here, towards like 35 cents. I'm not sure this is the best chart. Yeah, so you're kind of on the 8. You might grab the 8 and take off, but we're bullish there. I mean, this isn't a solid uptrend. Try to. Oh, that's terrible. I try to analyze it versus the dollar or tether for the most part. I would say keep an eye on this daily cycle coming back down, and then right in this zone right here. As long as we're above here, I mean, this is in a new long-term bull market, so it looks good. Oh, Matt, my new favorite. So this is a name that kind of was brought to my attention from our lead developer, Noah. He's in Toronto. He's been in blockchain forever. Guy's really talented. These guys, I mean, if these guys do what they want to do, this cross chain communication, bridging, I'm not, I don't know enough about their project to speak like technically about it. But I can tell you that this is kind of a cup and handle here. So this coin's pretty new right out of the box. And I don't know if you guys are familiar with cup and handles. It's kind of a basing pattern. Could also call that a kind of a W base. What tends to happen is you get a fall. I know I did that in yellow. It's probably a poor choice. You get a high, and then the market kind of corrects. You get a low. It has an oversold relieving bounce. It kind of bounces about halfway down. And then kind of it's just not ready to rally yet. It falls again, finds support at the old low. I mean, this was support here back in February also. And then starts to rally again. And then once again, it gets back to this high. It fails. But see, this is actually bullish that the market's basing right here. That's what creates the handle. So whether you want to draw it like a W or you just simply draw it more like this, they call that a cup and handle. And then this is your handle. So this is bullish. This is just prices basically just basing and coiling before it explodes. That's technically how you would represent that. So the way I think you play it, I mean, I went long and then I was going to add. See, again, this is if-then analysis. It's not, well, this is a $15 coin, so just go all in at one shot. I mean, you buy a little bit now. If it gets above this high, that's an opportunity to buy more. If it can't get above this high, well, maybe I'll get a shot at buying lower levels. So I'll let the market come to me, let the cycle come back low, and then maybe I'll get even more aggressive down here. And then I know my risk is down there, or my stop. So I can work into a position like this. And that's the thing. I want the pullback. I don't want to I don't enter guys in just one entry. I do it in 3 to 5 to 10 entries. So when I first get in, I never just pile in at one price. So the last thing I want is to get in and then the market just scream, because I won't make as much money. I want to get in and I actually want it to pull back on me, and then I can work a better position lower, and then I want the rally. But I think you time that up with your daily, and this RSI was pretty high here, so this can come back down. But I like this name. I think it has a lot of potential. I think this could be a big winner. So I'm kind of, it doesn't matter either way. I can't control the price. If it pulls back, that's actually a better opportunity. If it breaks above the handle high, then I'm fine with adding on that breakout. That's the same thing I was talking about earlier, right? That's a different breakout than up, pull back from here, and then here. Never would want to buy this after missing this. You could buy it, but you couldn't buy it heavy. This is where you want to get more aggressive. But this type of base and then the breakout, that's okay to buy more there too. You guys see that? Is that good, Matt? All right. CV, car vertical, KuCoin. Okay. I don't know that one. What do these guys do, Aaron? It's bullish on the daily. You've got a pretty good ebb and flow here in a long-term cyclical perspective. down, up, down. Looks like you're on another up cycle here. I like that you kind of have all of this. This is a kind of a typical altcoin pattern. And then boom, right there. You break that pattern right here. That's the start of your move up. This is your first pullback. Nice little bottoming tail right in front of the 30. Oh, this is bullish. You know, you've had that last cycle there was a good chance to buy. Maybe on the next pullback. I like that you're above the pie line on the 4 hour. Right. So, guys, just a simple way to look at markets when you're looking at the intermediate term. Anytime price is above pi and the 200 and it's rising, that's indicative of a bull market. And then you just want to buy the cycle dips, so you can time it up with your 4 hour cycles, and you're already trading with a great edge. Right? And then we just teach adding and reducing. So you're getting kind of low right now. You could probably add a little bit. I mean, if I was taking some profit there, I'm adding back in here. Buying here, taking some off. Buying some back, taking some off. This looks good. I don't know anything about that coin, but it looks good price-wise. GNO. All right, guys, I'll do this last one, and then I just want to show you some results that some of our traders are getting. I don't know if I know this coin. Do I know this coin? I'm not sure I know this one. Is there a better chart to chart it on? Got a crazy first day, looks like. I mean, that's first BTC. This is really sporadic. This seems like a pretty thin name. There's not a lot of data there. It's kind of putting in a swing line. That's kind of a tough one to chart. That's a little bit better. Pulling that. Yeah, that's better. I mean, here you had a long-term downtrend. Kraken has USD. All right. Well, this is versus BTC, but this was your downtrend. That all changed right here and right here. And you started a new uptrend, and then that kind of fizzled out right there, and then you went into another downtrend. Right? So even though you have these little intraday spikes, I mean, there's just no real buying. And then that kind of changed right here. And just like the overall market, now you got another new uptrend. So this is a classic example of you buy the first turn, buying here, and then you get your pullback. And we call that a gift scenario. When you have a new uptrend and you get that first pullback, that's a great opportunity. And usually it's the second leg that's bigger. This first leg and then the second one is a lot bigger. But that's in an uptrend. It's having some trouble there at the 200. If you can get above there, then you can maybe go back to these highs. All right, here it is versus the dollar. Same thing. It wasn't a downtrend. Lower highs, lower highs, lower highs, lower highs, lower highs. And then right here, you start to get above the 30. You took out that pivot high right there. Right. Nice hold of the 30-day right there. You can see how that moving average starting to arc back up. So this isn't a new bull market. You got the 200 there at 175. This is resistance, big picture, this whole area. It looks pretty good. If you work along there, it makes sense to have your risk right below that base. You know, maybe you go back to these highs. It's certainly possible. But that looks bullish too. But yeah, guys, so if you guys like this, I mean, if you want to learn to trade, you know, if you want to try to pick up some more consistency and kind of learn this on a deeper level, I do coaching, I do some mentorship. We trade together 2 days a week live for 8 weeks. And that's really the best way to learn. You know, I've been trading for 15 years, 10 years professionally. And, you know, I've traded with the biggest of the big, and we had a really good directional model. So now we're bringing that same type of model to the independent trader. And then we're obviously building a digital asset management firm for this new asset class. So, but anyway, I mean, I'll trade anything that moves. So we've been, like I said earlier, we've been trading the dollar a lot and the euro. Bonds have been kind of boring. Not a lot going on in bonds. It's just been kind of a one-way bear market. That might change with 10s holding 3%. But, you know, we'll trade equities around, we'll sell calls, and we just talk about a lot of different markets. But this is one of my guys. I'm really proud of him. He's trading pound versus the yen here. These are the types of results that you can get. But the key is it's not so much about the amount of money, it's the consistency. You can always add more zeros. I think this is one of my newer guys who did tenfold. Once you start to understand this timing piece, this is another one of my guys who trades futures. He's trading cattle here. He's trading copper. And so you just learn the model. And that's the nice thing is it's a small investment into yourself. And then it's a skill set you have the rest of your life. I mean, I don't know what that's worth. Save you money in these big recessions, you know, this next big downturn that we're going to have. We'll get a recession at some point. I mean, but learning to not only save money and manage your risk, but then making money from it. And what's nice about our model is that wherever the opportunity is, whether it's in stocks or the dollar or whatever is moving, it doesn't matter the asset class. You can use the same model. And so once you have all these skills, it's really pretty amazing. So he had like $8,000 that month, $10,000 this month. $9,000 that month. This is one of my other traders, guys. This is the consistency. I'm not kidding. Like when you get the timepiece down, you'll never see the markets the same ever again. I mean, he had one losing trade, and he brought his size down. He's a pretty big trader, and he brought his size down because he's new to the model. So that's perfectly fine. I mean, anytime you're introducing something new, you trade it small. It doesn't matter the size. It matters the consistency in making the right action. But I mean, you're just not going to get this anywhere else, guys, this level. What else is on here? I think you guys get the point. Here's look at all these. Look at everything's in the black. Another new trader. Thanks for the feedback. What did this 400% in January, 570%, 450%. You guys are just crushing it. One guy told me he paid back 100 grand trading crypto once he got our model down. Traded about 1/10 the size my first full week. I said I want to get more consistent in my trading, and the bigger dollars will fall. That's exactly right. You got to get consistent first. Somebody can make a lot of money. 2 weeks later, they blow their account out. They have no process. That's a big problem in crypto. Only one tiny loser all week. Anyway, you guys get it. So yeah, so if you want to know how to get started with us, it's jenkinsrm.com. This is going to be changing to the Block Edge site, but there's our chat room. It's free to come in there and get you in the right spot. But if you guys want to, just encourage you. I mean, just like anything in life, if you want to get good at it, you got to, there's a cost to it. So I try to keep it low so, people can learn this stuff and it's not a big barrier to them making a decision. But the chat, I mean, this room, I don't know what to say. The amount of consistency in the calls we have in there for $99 a month, it pays for itself over and over and over again. I don't know why anybody wouldn't stay signed up with that. The trading course, this is 300 hours of all our live trading. So I've trained hundreds and hundreds of traders, but this is some of our live sessions we did at Jenkins Risk Management. Before I was training guys on the treasury desk, I had 5 traders. I've helped a couple of young guys, never knew the bond markets. They make high 6 figures now. I taught them to trade. But this is the video of what I did for brand new traders when I walked them through the model. And it's about 9 hours of me talking about execution. We have 3 pillars to the model. It's analysis first. So you got to learn how to get the trend right, the cycles right. You understand the origins of our model, which has to do with physics, wave formation, vibration, thermodynamics. You start to understand why markets do what they do, and everything. It's just energy for the most part, moving through the markets. And then you get that background, and it's analysis. And then we move into execution. So, how to identify the setups on the chart, and then what you do with those setups. So, hey, I know, boom, I get this setup. I know how to identify it. I enter, stop right below the low, boom. Nice, tight, consistent, precise trading. And then we build into that the risk management side. So it's analysis, execution, and risk. And then on the execution or on the risk side, it's about your trading plan. It's about making promises to yourself. It's about journaling your trades. It's about, I will not risk more than this amount per trade. I will not lose more than this per week. It's all the discipline and then the psychology of trading. You got to have both. You can't just have good analysis, or you can't just have good trend lines. That's not going to make you a successful trader. You got to be able to put, hey, how do I work into a position? I can be right on the direction and I can do a lousy job with the execution, and you'd be way too heavy too early, fouls your whole trade up. So that's everything I know. And it's only $2,000. It's 10 years of value for $2,000. Then you get the live, you get the real-time alerts. And then this is our live room, our coaching session. That's where we trade together live. So this is for the traders that really want to get that consistency, because it's different when you get to work the trade live and you see me working my position, see how I work my size, how we come out of things. We get to kind of see things before they happen and then execute on it. And you do that over and over together. That's how you build that consistent habit. And that's how you build the right work ethic and consistency. But you got to kind of do it in a live session. So that's what that's for. And that's pretty much it, guys. It's been a pretty good week. What was I going to say? This is Block Edge Capital. We've been making some changes to this. I don't know if it's quite ready yet. Alec might have it down right now. And then we're still working on our oh, there it is. We're still making some changes on this. And then for some of you that kind of have asked, but we're in the process of doing an ICO. We're trying to take it down privately. We'll see. But there's our white paper, our pitch deck. This is everything that we wanted to do on our financial services side and take it a step further. I mean, there's nothing really to stop the TD Ameritrades or the Goldman Sachs or, the Thinkorswims. They're going to get into crypto and it's going to be the same thing. Nobody really offers a real approach to getting the market right and helping you with your timing and all the stuff that we teach. I mean, no brokers are really good at that. Most brokers are bad traders. They don't have any concept of time. They don't understand. They don't even have the first clue about cyclical analysis. So we want to combine all that. I guess you could imagine a Binance, but Binance actually isn't afraid to stick their neck out and make calls and act as an advisor. So we're setting up ourselves as a CTA and going to do a digital asset management firm. So we can make those calls. We can send out those signals. You can get it in an app. And then we can do some stuff on the technology side where you actually execute. And we have a concept called bring your own wallet. And you can just send you the token right to your wallet. We kind of simplify all this disjointed multiple exchanges, multiple wallets. We got to make that whole process simpler for people as they move into the space and they want exposure and just, brand new asset class. So we got to help make it simple for people. Anyway, you guys got anything else? Hey, Angel, we don't have a hard date on that. If you're interested, we can talk about it a little bit. If you come into that chat room, are you in our River room? Apologize if you are. I can't. We got so many different people in there. I think you might be. You know how to get into our River room? You can message me. Oh, you did? Okay. Well, let's talk again if you want. I can give you some details. All right, guys. Well, thanks for hopping on. We're gonna do some more of these formats. I told there's a couple of traders that have been with me for a while that I think we're gonna jump on and maybe try to do a live session. We've been having fun doing the Bitcoin podcast. We were doing that twice a week, and I think what we want to do is keep doing the podcast, but really take that whole experience where it was interactive with Dimitri and Alec, but we can do that same kind of thing here and trade the markets live together and then bring them in so it's more interactive and you guys can ask questions. And then, we can just record that. It's pretty much like a podcast at that point. But I want to try to do this a couple times a week, so I'm sure we'll have a schedule for it. And then we've got some other venture partners that have a really big following that want to do the same thing and kind of partner on it. So these live sessions might grow pretty fast. But all right, guys. Well, if I don't talk to you, enjoy the rest of your weekend. Is anybody doing anything fun? It's pretty nice here, South Florida. I'll be probably hanging out over at the beach. I don't know, maybe some Cinco de Mayo activities. Just been watching too much hockey lately. All right, guys, you're welcome. Have a great weekend. I look forward to seeing some of you on the live room team, the coaching, and we'll talk to you in the chat. All right, guys, later.